Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Rich Checkan, President and COO of Asset Strategies International. It's a pleasure having you back, Rich.
Great to be here. Thanks for having me, Ivan.
Yeah, thank you for coming down. There's some really exciting news happening in precious metals right now. Exciting articles and exciting moves that's happening in the precious metals industry for silver and gold. Before we were recording this, we were talking about Morgan Stanley and how they changed their portfolio percentages on what people should get. What's happening with that, Rich?
Yeah, that's kind of a big deal. Obviously Morgan Stanley is a blue chip mainstay in the brokerage industry, and for years they've been 60-40, 60% stocks, 40% bonds, unwavering. And they just recently came out with new guidance for their folks saying it ought to be 60% stocks, 20% bonds, 20% gold. So they're
Wow.
saying sell half your bonds basically and buy gold with it from 0 to 20 in the blink of an eye. Obviously, it's not too late, but it should have come a long time ago. But I'm glad they're finally coming around to it now. Let me put it that way.
What's the implications to the economy and the financial world when, a big, large investment group of people, or just, a large percentage of people start selling bonds and going into gold? What happens to the economy? What happens to bonds? What happens to gold?
Obviously, that the bond market is massive. So, when you start seeing sales out of a massive market in a decent way, I mean, 20% of holdings. It's just Morgan Stanley. Let's face it, it's not everybody coming out with that recommendation, but others may follow,
Right.
right? So that's very positive for gold and gold's price going forward, as you can imagine. I just give you an example. I mean, I haven't done the math or anything, but industry historical penetration of gold in a portfolio is typically about 2%, right? And right now, we're probably at about a half of 1%. So we're way undervalued from what historically people hold in a gold portfolio. And anybody you talk to about that will suggest that just that move from, say, a half to not even a two, but to 1%. Just another 0.5% in gold is going to be massive and would have major implications for the gold price. So just kind of put that in perspective. We're talking a little ripple in the bathtub versus what a move of that nature from bonds to gold might do. That's more like a tsunami.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. What about Financial Times? We were talking about before we started recording about Financial Times. What's happening there, Rich?
Financial Times just came out with a front page headline saying that gold-plated fear of missing out, or FOMO, is driving the gold price higher. And that comes on the heels. Wall Street Journal was out a week or two ago with two different articles talking about owning some gold in your portfolio, et cetera. So Financial Times is on board now. Again, another mainstream type organization. Of course, they're attributing it all to, fear of missing out, and that's, fear and greed trade, I guess, with gold. I just think it makes common sense. We talked, what, a couple weeks ago. It's the biggest no-brainer on earth. As long as we don't have fiscally responsible, legislators voting on the budget, the bottom line is gold price is going higher, and that's been the case for years. I mean, 25 years, gold's up like 1,200% so far this
Wow.
millennium.
What about the other tier one assets that you were speaking about briefly before we started recording? What's happening there?
Yeah, so gold has never been, the chosen one, if you will, when it comes to central bank reserve assets until recently. Earlier this year, press came out that gold had surpassed euro, which was the number two held currency in currency reserves. And just recently, within the past week or so, gold surpassed US Treasuries as well. Right
Wow.
now, the number one asset by allocation to central bank reserves is gold.
Wow.
Only only real money.
Yeah,
Only real money.
it's crazy how quick it's kind of changing, the public perception. Like now you're talking about Morgan Stanley, Financial Times coming out with articles. Are we going to see like, I guess the final straw would be, seeing a massive move out of the tech stocks and the overall stock market into gold. What are your thoughts there, Rich?
I don't know that you're going to see that, be honest
No.
with you. I mean, this economy is based on capitalism. It's based on the stock exchange. That's how people participate. I don't think that's going to end. I don't know honestly that it needs to end. All I need to see there is just a change of attitude, a change of behavior. When you're holding something, whether it be tech stock or anything else that's overvalued for your position, you should take some profits and bank it into something stable. And that's what I've called for. I've been in this business 30 years. I think you can make money in other assets. And when you make that money, if you want to hold on to it, you go to the number one store of purchasing power, the best thing out there ever known to preserve purchasing power, gold. So bank some of those profits, put it into precious metals, and hold on to those gains for the future as you continue to make money elsewhere. I do believe you got to have a little bit of diversity.
There's
Do you
about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
do you believe, Rich, also there could be a correction in the precious metals market?
Yeah. Right now, it seems like gold's going up $100 an ounce a week.
Yeah,
Silver's
it's pretty
following
crazy.
suit with, yeah, $5, $6 an ounce per week. I mean, that's not sustainable, I don't think. It doesn't mean that it's not warranted. Let's face it, they've been held down for quite a long time. People didn't believe in them. And I'm going to give you a quick anecdote on that in a second, but people didn't believe in them, so they didn't hold them. Now they're starting to come around and they're moving very quickly. I would absolutely expect a pullback. Now, when people see that at all-time highs right away, the first thing they're going to think is, that's it, it's over, I missed it,
Right,
right?
yeah.
I'm here to tell you, Ivan, nothing could be further from the truth. So, you need to be able to tell the difference between a short-term dip in gold, and silver will follow suit. So I throw that into but a short-term dip in gold, or a change from a bull to a bear market in gold. Okay, and these are some of the things I look for real quick. I look at the gold price, right? So from the first bull market, 71 to 80. Gold hit a peak of 850 an ounce, right? Second bull market, 2001 to 2011, gold hit a peak of 1920. That was 2 to 3 times the previous high. I'm looking very conservatively at 2 to 3 times the previous bull market high in gold, right? So that would put gold at somewhere between $3,800 and $5,700 conservatively. That's where I think gold's going to. You want to look at the duration. These things are going to last 10 years or more. Long in the tooth cycles for precious metals. We're nowhere near that right now. I'm going to look at the gold silver ratio, right? Right now, it's still about 80 to 1. It needs to get down to 35 to 50 to 1 when both gold and silver are achieving high prices for their valuations. I want to look at sentiment. So when you're taking Uber rides right now, are your Uber drivers telling you how much money they're making in gold and silver?
No,
Of course not. We're not
no,
there yet. We're nowhere near that level. I want to look at geopolitical stability. Is peace breaking out everywhere in the world?
no.
No. Social stability is domestically. Are everybody kind of hooking arms and singing kumbaya? It's not happening. There are massive divisions, both geopolitically and internally within countries. I want to look at the Dow gold ratio. That's got to get down to like 5 to 1. It's got to take like 5 ounces of gold to buy the Dow. We're nowhere near that. Okay. So the bottom line is all of these things are indicators that we're switching from a bull to a bear market. I need 3 or 4 of them to start gathering like storm clouds before I expect to see a raindrop. None of them are firing right now. So are you missing out? I don't think you're even close. And we'll have plenty of warning signs before that happen. And I told you I'd give you a quick anecdote. It kind of drives home how important it is, the Morgan Stanley piece. So I was talking with a potential client, and she said, my broker told me to go ahead. I wanted to buy gold when it was under $3,000. And my broker said, no, don't do that. Why would you want to do that? It's too late. It's already had its run. And I said, you know what? You're still not too late. And I shared the Morgan Stanley piece with her. Right. And I said, they're talking, this is mainstream, and they're talking about going to 20% allocation of gold. And she's like, wow, that makes a difference.
Yeah.
I'm going to go do something.
Maybe
So I do think it has the power to move some people.
she might
For what it's
fire
worth.
she might fire her broker.
I suggested it. She said, no, they've done a good job and other things. I'm like, yeah, but they don't know gold. In all
Yeah.
fairness, they don't talk about what they can't serve well and what they don't understand. They
Right.
know stocks. They know bonds.
Yeah,
Yeah.
exactly. They don't know gold.
And,
Rich,
and if they refer something else that they can't handle, they're referring business away. Right.
that totally
But
makes sense.
we need these brokers to be more interested in their clients' success than in their own pocketbooks. And I think that's where they'll do better for their clients than they would have recommended gold years ago.
Absolutely. Now, Rich, before you go, what's kind of like your last guidance right now for everyone getting into silver and gold, everyone who's holding silver and gold? What would be kind of your direction and guidance for the precious metals community?
Yeah, my big thing, Ivan, is just, I think I said it last time, just do something, right? So when I first started in this business, I couldn't scratch a bunch of nickels together, to be honest with you. It was 30 years ago, and I couldn't afford gold. It was really expensive at 250 an ounce. Okay, I could not afford it.
Wow.
So what did I do? I started buying an ounce of silver at $4.53 an ounce.
Rich, thank you so much for joining us. I want to thank you so much for speaking to everyone. Where can people connect with you?
Well, actually, there's a couple ways, either on our website or our YouTube channel, and I think you're able to put those tags in the notes. Also, if it's okay, I'd ask that you include a link. We're gonna Wednesday, October 8th. We're gonna have a guest at a webinar called On the Move. It's gonna be myself and Adrian Day hosting, and we're bringing in John Duty. Of the global analyst, I think, or I'm sorry, gold stock analyst, and incredible picker of mining stocks and resource stocks for many, many years. I think most people in the industry know John. We're going to get started at 7 p.m. Eastern on Wednesday the 8th. And if you could include that link, it's a free webinar, but you do have to register. So by all means, register, and we'd love to have you and hear what's on your mind. We'll take questions live as well.
Absolutely. I'll put the link in the description below. Everyone watching this, highly recommend you check out that webinar. It'll be very informative. I'm confident it will be. But Rich, thank you so much for joining us. Such a huge pleasure, especially with everything happening precious metals. It's such an exciting time. And yeah, I'd love to have you back on in the future.
To be here, Ivan. You're so easy to talk to, and hopefully we're bringing some value to your listeners. So
Oh yeah, absolutely you are. Well, thank you again, everyone, for watching. And Rich, I'll talk to you soon.